All right, so we've looked at the two different approaches. We've looked at the 4 hour, the daily 4 hours, 1 hour. All right, and I've also talked about the 4 hours, 1 hour, 15 minutes. So we're going to be using those two different approaches right now, all right, on different commodities, so that you guys can see the practical application of that thing of the things that I just explained. All right, so let's go to AUD/JPY. So which schematic which of the two combos should we use? Should we use daily 4 hours, 1 hour, or 4 hours, 1 hour, 15 minutes? Which one do you think we should use?
All.
All?
Yes, daily 4 hours.
Jesus Christ. Let me know
1 hour, 15 minutes.
You shall like to give yourself work. All right. This was AUD/JPY. I think I gave this setup during one of my market review sessions back in the day. But I'm going to have to clear this chart right now. Please hold on. All right. So let's use a naked chart. So this is the daily time frame. All right. And the first thing you want to do on the daily time frame, remember I said you use the first time frame to get your bias. All right. And how do you get your bias? The best way to get your bias is by looking at the market structure. All right. So you use the market structure to get your bias. All right. So on the higher time frame, on the daily time frame, let us look at what the market structure is like. All right. We had the previous swing high broken here. Another swing high broken here. All right. With lots of internal structure. All right. Which means that if this was our swing high, this is actually our swing low. All right. Which means that until price breaks below this low, all right, we can still conclude that price is bullish. All right. We can still work with a bullish bias. And there's a reason why I'm saying that, because even if you look at the internal structure on the daily time frame, you can see that we've also gotten this breakout, all right, this break above. So let's go to the 4 hours time frame. 4 hours time frame, if you look at, all right, welcome, Mickey. 4 hours time frame, if you look at what the 4 hours time frame is looking like, all right, we got the break of structure here, all right, which means that the other block was somewhere around here. All right, let me mark out that other block so you can see what I'm talking about. All right, so you can see that price has gotten to this other block and reacted already. All right, which means that on the 4 hours time frame, remember the 4 hours time frame is for trend confirmation. All right, so let's look at the 4 hours time frame. The 4 hours time frame, we can see, you guys remember what I taught you about the power of 3. I think we've mentioned the power of 3 in this class.
Yes.
HMT, what time frame does scalpers use? I think for a scalper, you can do 1 hour, 15 minutes, 5 minutes. For a scalper, you can do for 1 hour, 15 minutes, 5 minutes. iPhone. iPhone, you can type your question in the chat box. All right, I would address it. Charles Obina, you can also type your question. I will also address it. All right, I don't want us to have too much. I don't want us to work with, you know, too much noise in the background. Yes, for those of you who just joined, Charles, let me know what you're talking about. I don't get your question. It's not complete. Power of three, where I was talking about accumulation, manipulation, and distribution. Abinobi I teach.
No.
Oh, okay. That must have been October set. And don't worry, don't rush it, you'll get there. Those of you who just joined, Charles Obina, are you a pre-mastery student? Let me start from there. Let me know if you're a pre-mastery student. What batch? Is it November or December? Or October? What month did you join the academy? Let me know quickly. Okay, your November set. All right. Well, we're talking about time frames, all right, multi-time frame analysis. All right. We use multi-time frame analysis. When I used the daily to identify the new highs, there was a lower low, but I used the higher high. Can you mark out where you're talking about? Let me see where you're talking about. iPhone, mark where you're talking about. Let me see. Let me see what you described as the lower low. Are you talking about this? Is that the low you're talking about? Well, that's not a lower low, because this was just an internal structure. And that's why you see that price broke above it to create a new high. So we cannot, based on this, say that the trend is bearish. No, this was an internal structure, and you can see that's why price has broken above it already. Because if it wasn't, then price would have mostly reacted from here to continue downwards. Do you get it? All right, Charles Obina, this is actually the third part of the training, so that's probably why you're feeling confused. All right, there's part one, part two. We just concluded part two. All right, this is part three. So on the Telegram group, I'm sure that you get access to the videos. All right, so you can watch yesterday's part and then today's part, the two videos. All right, so let's go back to the 4 hours time frame. Since price has already reacted to this order block, all right, it means that we need to look for the nearest or the next order block that price will most likely react to. All right, and in that case, I will think about it. Probably will be on my YouTube channel, probably. So I think I want to mark this week. All right, my criteria for marking that week is based on AMD. All right, but you would get to find out more about that later. However, let me just give a small example or a small explanation. You can see that here, all right, we have something like a consolidation, and then price did a fake out. All right, price did a move that looked as if, oh, I've broken low out, only for it to come back and break above the previous high. So this fake out is called the manipulation. All right, that's called the manipulation. All right, and then we now got the distribution. All right, so that's what I was talking about as AMD, but let's leave that for another day. So that leaves us with this zone on the 4 hours time frame. All right, so let's go to the 1 hour. All right, let's go to the 1 hour time frame. All right, on the 1 hour time frame, you can see that it is still just a week, right? So let's go to the 15 minutes time frame. You know, using the daily 4 hours, 1 hour time frame, 1 hour combo, using daily 4 hours, 1 hour combo, we've already completed that, right? Using daily 4 hours, 1 hour, we've already completed the span. All right, but now I'm using 4 hours, 1 hour, 15 minutes, which means you can actually use both together. All right, you start from daily and end your analysis on the 15 minutes. All right, but you can also start from daily and end your analysis on the 5 minutes. However, remember I said that I will only be showing you how to use this as intraday traders or day traders. All right, so let's go to the 15 minutes and check that zone. All right, that demand zone. Let's see where we can be able to find our entry on the 15 minutes. All right, so you see that on the 15 minutes, what we have now is more than just the weeks. All right, we have more than just weeks on the 15 minutes. So where is the last sell candle, all right, before the buy? I think this would be it. So let me mark that one with a different color. Remember I said I like to mark my order blocks from the open price of the candle. All right, not from the eye of the candle. So let me change the color of this line. All right, so let's go back and see if price has gotten there yet. So now coming to the 15 minutes, what do you notice? Price touched it. Can you see? Price touched it and reacted immediately. All right, and reacted immediately, which means that if you are taking this trade, all right, worst case scenario, you would have gotten at least 1:1. All right, because this new drop is actually happening from this order block. You can see that that one also, based on the 15 minutes structure, break of structure here, imbalance here, all right, price came back, liquidity grab from the equal highs, came into the other block, then dropped, all right, and now we're saying that this could also serve as equal lows, all right, equal lows, these are imbalance, all right, which means that we could, let me, hold on please. You can see we have a break of structure there, all right, which means that price could literally react from this spot, all right, this other block. Is either it reacts from this other block based on the 15 minutes, all right, or it comes inside this area, all right, it comes back into this area to give us something like this, where this will create another break of structure, all right, this will create another break of structure, all right, at this point, and then price can come back to the other block that gave us that break of structure. Do you guys get it? Or have I just been talking in the nonsense? Do you guys understand what I just explained, please? Now, let me go over the last part again. All right. Remember I said that price would, you know, if price does not, we've gotten a small break of structure here now. All right. And then the liquidity grab, which means that price will most likely come back to this other block that gave us this particular break of structure. Right. Just looking at it from the 15 minutes time frame. However, if price does not react from this other block, we are still left with this initial order block that we marked using our 4 hours to 15 minutes combo. All right. So price can now come inside this main area, this order block area. all right, create a small I, then come lower, break above that small I, all right, and after breaking above that small I, we would have created an order block, all right, because it is the order block that is created here that will push price to break above this I, all right, and then we can now look for entry from this retest, all right, or we can even enter from this area already. Let me show you something. MMN, I'm coming, please. Let me show you guys something quickly. If I wanted to take this trade, all right, personally, one of the ways I would approach this trade would be to put my entry here. All right. My entry here, my stop loss there, and maybe my take profit will be somewhere around here first, all right, which will be around 1:3. All right, second TP will be here, which will be around 1:5. And then my final TP will be somewhere around here, which will be 1:7. All right, which will be 1:7. So this is one of my schematics for taking an entry. So MMM, go ahead. I think you have a question. Ask your question, please.
Okay. Sorry, I was talking on the liquidity graph.
Okay.
Like I noticed that it usually leave a or like a fake out, and that fake out is to happens to be order block. I think I read something concerning that.
That liquidity grab will leave a fake out, and that fake out will be an order block. It's possible. Let me explain what they mean by fake out. You can see this liquidity grab here. You can see this liquidity grab here, right? This particular one.
Yes.
You can see that price has broken below that liquidity grab area. Price has come below it. Yes. But instead of price going all the way down and creating a new structure, what it will do is that it will now shoot back up. All right. That shooting back up is what they described as the fake out. Do you get now?
Yes.
So after it shoots back up, that point where it reacted, all right, where it created the fake out, usually sometimes acts as another order block. What that means is that if price reacts like this from here, for example, let me make that a lot. Sorry, let me do this. All right, you can see if price moves like this exactly, all right, it will mean that this was a fake out, because after the fake out, price came back and broke above the previous high. All right.
Yes.
What that will now mean is that the last candle here, the last sell candle before the buyers took over, all right, if price comes back to that buy candle, it will also still act as an order block.
Yeah.
Do you get it now?
Okay. Yeah. Yes.
Very good. So should we take one more example? People of God, should we take one more example? Let me know in the comment section. Fake out inducement, yes, they are brothers and sisters in the Lord. All right, let's take one more example. How to use the ratio tool? It's just the normal risk to reward tool on trading view, long position, short position. This is it here. This is where I picked it. Long position, short position. So you put the entry, then the stop loss, normal. It don't show. All right. So for this last example, I want to use BTC USD. And I'm going to be using BTC USD because I want to use it to try to give some people maybe an insight into what they might expect, what they can expect. Possibly. I'm not saying that is a promise that whatever I tell you now is what will happen. Or somebody go and say, more Forex analysis rather God forgive you. So BTC USD. Remember, I said that you use the higher time frame to formulate your directional bias, all right, the highest time frame. So looking at what we have on BTC USD, what is the general bias? How do I know where to put my TP? Jesus Christ. Well, there are two ways that me I know, or three ways that me I know. One, you can target the previous high, all right, the other block that formed the previous. So if I'm buying, all right, I'm buying towards the other block of the previous high, all right, which is sometimes going to act as an area of resistance, all right. If I am selling, I target the previous low, which would act as an area of support, all right. That's one. Two, there's also a way that I use Fibonacci to get that, all right. There's a way I use the Fibonacci retracement to know where to put my take profits, all right. Sometimes it gives me up to TP 1 to 5, all right. I can use the Fibonacci too. Another thing that you can use is to target the nearest area of liquidity, all right. You can target the nearest area of liquidity too, so that's also something that you can work with. So have I answered your question, HMT? Let me know if I've answered your question. So, guys, looking at this daily time frame on BTC USD, what's the general bias? I don't know if it's a mister or a sister, but precious crystals. How to spot liquidity is not something that I can teach in the next few minutes. All right. However, in all sincerity, if I will be frank with you, I think that beyond just knowing how to spot liquidity, you really should consider getting a full-blown, mentorship, all right, so that you will not just be picking things in the middle, all right? You understand? So it's important that you get that. You would like to know how I do that with the Fibonacci. All right, remind me if I was, it's actually on my YouTube channel. You can check now. You guys have access to my YouTube channel. But if not, then you can remind me so that I can drop a link to that. All right. So precious crystals, I'm sorry that I may not be able to answer your question, all right, because it is broad. It's not just liquidity that you need to know how to spot, all right? You need to know what type of liquidity exists, all right? You need to know a whole lot of other things, all right? So yes, so on daily time frame, our bias here is bearish, all right? This was a low that has been broken, all right? This is another low that has been broken, all right? So we can say that we are in a downtrend, all right? For my YouTube, you can just go to EasyFX Academy. And like I said initially, for those of you who are based in Ilorin and you probably need, physical mentorship, all right, you can easily just reach out to me and then work something out. All right, we actually have an office somewhere in Ilorin, at an undisclosed location in the CIA bunker. All right, so the location is only disclosed to the initiates. So when you look at this, all right, the direction is clear, bearish. So we go to the 4 hours. Now I'm using the daily 4 hours, 1 hour combo first of all right? Then if possible, we can now break that combo down to the lower time frames, all right? Yes, so looking at this on the 4 hours time frame, all right, we can see that yes, we have also we've also gotten this looks like a break of structure or possibly a fake out, all right, because we can see that it's looking like an AMD kind of structure, all right. Now we want to mark out the areas that price might want to come to, all right. And usually for me, I think I like to check out the weeks, all right, because weeks on higher time frames usually have a secret that they are holding on the lower time frames, all right. So we mark these weeks, All right, but nonetheless, I think let me start with a move that has already happened. All right, let's start from here. All right, let's start from this previous one. All right, let's start from this previous one. Remember on the daily time frame, this was the break of structure, right? And then we saw price come towards, after breaking structure, price came back to this area. All right, so we want to investigate this area and find the zone that price reacted to in this area. All right, and if you look at it, we'll come to the conclusion that, all right, 4 hours time frame, this looks like an interesting area. All right, let me check. Like I said, I usually like to check areas where there are wicks. All right, so let's work with this area. Going to the 1 hour time frame. It's interesting that somebody said we use the same strategies. All right. However, my strategy is a combination of a whole lot of things. I'm only showing this because this is what the course content requires me to show. All right, so let's quickly go back to that area. All right, so we've marked out the area. All right, and you can see what happened. That area was actually where price reacted to, but let's conclude yet. 1 hour time frame, let's look for the order block. Let's look for the strong order block. And looking at the 1 hour time frame, you will agree with me that this is our clear order block. All right, where's the open of the candle? Right here. All right, where's the eye of the candle? Right here. All right, so let's go to the 4 hours time frame and confirm if that was where price reacted from. What do you see, guys? How sweet does this look? Can you see that reaction?
Yes.
So even if I put my stop loss somewhere around here, my entry somewhere here, right? You see that this was a trade that gave us 0 drawdown, all right? And at the point where we got to the previous low, all right, which is somewhere around here, that was already about 1:8 risk to reward, all right? And by the time we got to this old low here, all right, that was around 1:15 risk to reward. All right, so that one has happened, it has played out. All right, and now we have gotten a break of structure. All right, let's come to here. All right, here, for example, this high that price created before dropping lower. If we investigate this high well, all right, first of all, you see that we have this imbalance over here. All right. There's a sweet imbalance. All right. Inside that imbalance, it means that there is a secret hiding. All right. And I can see that there's already a wick. All right. On the 4 hours time frame around that imbalance. All right. So I've marked that wick. Let's go to the 1 hour time frame and investigate where that wick was formed. All right. Because like I've always told you, every candlestick is telling you a story. All right, every single candlestick that you're seeing tells you a story. So that was 4 hours time frame where we saw the wick. All right, but on the 1 hour time frame, what are you seeing? On the 1 hour time frame, we see the order block much clearer. All right, imbalance, order block here. All right, and then looking at where price reacted from. Let's come to that. Can you see that?
Yes.
How would you describe this kind of entry?
Point.
This is another extremely sleek entry. All right. So see, this is, I'm not showing you guys theoretical knowledge or they say. I'm actually showing you my personal approach to trading using multiple time frames. All right. Do I have other confirmations that I use? Yes. And if you are taking this trade from that top, all right, till when price hits this take profit, you would have done 1:53 risk to reward. Smooth. Just like that. Does that sound sweet? What do you guys think? Let me know. Let me know what you guys think. Does it sound sweet? All right, good. So let us come now to the current market status. All right, remember I said that I'm going to try to give you guys a forecast of what to expect from BTC USD. So this was our break of structure, right? This was the first zone that I marked. Okay, and if you look inside that zone, you will see that there is HMT. I use the 1 minute time frame sometimes, but usually I work more with 3 minutes time frame. All right, so looking at this now, I think this would be my zone. All right, and that would be after I have seen liquidity taken from this week. All right, so typically what am I expecting from BTC USD? The answer is simple. No, I'm not asking them to trade it now. At least you will hear when crypto people start to tell you that BTC dipped. So it will come here, all right, then most likely come back to this point where the manipulation occurred. All right, because if you look at that area where the manipulation occurred again, you see that this is an imbalance. All right, price has reacted from this other block already, which leaves us with this one. All right, because from here now we'll see equal lows liquidity taken out. All right, we still have an imbalance that has not been completely filled. All right, and then price can come back to that imbalance before we now do this. Is that clear, guys? Hello? Yes, of course. Of course, this manipulation grabbed liquidity from these two lows. It took out liquidity from these two lows. So have you guys learned something tonight?
Yes, sir.
This is on the 4 hours time frame. This is on the 4 hours time frame. I want to hear your feedback. Have you guys learned something remarkable tonight? Let me know. Let me know. Just drop a short review in the comment section. One word. Describe tonight's session in one word. All right. Good. All right. So I'm just going to wrap up tonight's session with of course, when you go back to this video, all right, and then you practice step by step, all right, I can assure you that you definitely get a lot of clarity. Charles Obina, if you were in the pre-mastery class now, you would not have this challenge, all right, because they have gotten all the foundations necessary to capture all of this. Abi, I lie. All right, so for those of you who probably, you want to reach out for personal mentorship, you're based in Ilorin, you want one-on-one mentorship, all right. I only take 10 students per semester. Okay, so you can reach out to me and then we can discuss about that. All right, MMM, ask your question. I think you have a question.
Okay, sir. Like yesterday you taught us, I think you were telling us about, let me go back to it, like 60 candles make 1 minute.
Yes.
Like 2 30-minute candles inside one completed 1 hour.
Yes.
So what I'm trying to say is like, okay, when you're doing your analysis from the
Do
daily
you
time frame
calculate all
to
of that?
Yes.
No, you don't. You don't. It's not mathematics. You too like maths. I was just using that to
No.
explain.
I was only asking.
All right. All right, guys. So thank you so much for joining tonight. All right. We're going to wrap up this session here. My students will still meet with me by Monday, by God's grace. So we have a session and then we can trash out the next topic. All right. You guys know that I already love you now. Maybe you know now. All right. You guys know. So anyhow it would be now. That's my number. You can reach out if you need personal mentorship. If you're already my student, please don't save my number and start disturbing me. All right. So Mickey boy, that your mouth, don't worry. I'll deal with you. So guys, have a fantastic night. Have a lovely weekend. God bless you. And, till when next I see you. Bye-bye.